What if I told you that something just happened in the silver market that could change everything investors thought they knew about precious metals? What if the move we are seeing right now is not just another short-term price jump, but the beginning of a major shift happening behind the scenes of the global financial system? Over the last few days, traders, analysts, and even large institutions have started paying close attention to unusual activity in silver. The charts are changing fast, supply concerns are growing louder, and demand is rising from places many people are not even watching yet. Some experts are now warning that silver could be entering one of the most important moments in decades. And if that is true, then the next few months could shock the entire market. Welcome back to Pulse of Silver, the channel where we break down the biggest silver news, market trends, and price predictions in simple and clear language. Today's update is one of the most important stories we have covered in a long time because something big just happened in the silver market, and many investors still do not fully understand what it could mean. This is not just about price movement. This is about pressure building underneath the surface of the financial system. Silver has always been different from gold. Gold is mainly seen as money and a store of wealth, but silver sits in two worlds at the same time. It is both a precious metal and a critical industrial metal. That means silver demand does not only come from investors buying coins and bars. It also comes from industries that rely on silver to build products the modern world cannot function without. Solar panels, electric vehicles, medical equipment, military technology, and advanced electronics all require silver. In fact, silver is one of the most conductive metals on Earth, which makes it extremely valuable in high-tech manufacturing. Now here is where things start getting serious. Industrial demand for silver has continued rising while physical supply has struggled to keep up. Mining production has not increased enough to satisfy growing demand, and some analysts believe the market has been running in a supply deficit for several years. That means more silver is being used than produced. At first, the market can hide this problem by using stored inventory. But eventually, those inventories begin shrinking, and once that happens, the pressure starts building quickly. Recently, several market watchers noticed unusual movements in physical silver deliveries and exchange inventories. Some large buyers appear to be taking real metal off the market instead of simply trading paper contracts. This matters because paper silver and physical silver are not the same thing. Paper contracts can be traded in huge amounts, but physical silver is limited. When demand for real metal increases suddenly, shortages can appear very fast. At the same time, economic uncertainty around the world is pushing investors toward hard assets again. Inflation concerns remain high in many countries. Government debt continues rising, and trust in traditional financial systems is becoming weaker. Whenever confidence in paper currency starts falling, investors usually begin looking for assets they believe can hold value during unstable periods. Silver has historically benefited during those moments. But this time feels different to many analysts because silver is not only facing investment demand, it is also facing industrial pressure from the green energy transition happening globally. Governments and corporations are investing billions into renewable energy infrastructure, especially solar technology, and silver plays a major role in that industry. Every new solar expansion project increases silver demand even further. The question now is simple. Are we watching the early stages of a major silver breakout, or is this another temporary rally before prices cool down again? That is exactly what we are going to explore in this video because the signals coming from the market right now are getting harder to ignore. To understand why this silver alert matters so much, we need to look deeper into what is happening behind the scenes. Most people only watch the silver price on a screen, but the real story often happens where physical metal is moving. That is where many analysts believe the warning signs are now becoming impossible to ignore. For years, silver prices have behaved in ways that confused investors. Demand would rise, inflation would climb, global uncertainty would increase, and yet silver would still struggle to maintain strong upward momentum. Many retail investors became frustrated because silver often appeared undervalued compared to gold and compared to the level of industrial demand entering the market. But according to several analysts, the pressure has continued building quietly underneath the surface. One of the biggest issues is the simple fact that silver is consumed in massive amounts by industry. Unlike gold, which is often stored and recycled, much of the silver used in industrial products disappears into manufacturing. Tiny amounts of silver are used in electronics, batteries, solar technology, and medical systems. But recovering that silver later is often expensive or impossible. That means a large amount of silver leaves the market permanently. Now combine that with years of underinvestment in mining production. Opening a new silver mine is not easy. It can take many years, huge amounts of money, government approvals, and stable political conditions. Even when prices rise, supply cannot suddenly increase overnight. This creates a dangerous situation when demand begins accelerating faster than supply growth. Recently, several reports showed continued declines in available exchange inventories. Some traders believe that large institutions and wealthy investors are becoming more interested in securing physical silver before supplies tighten further. When investors remove physical silver from exchanges and vaults, it reduces the amount available for future delivery. That can create stress inside the market very quickly. There is also another major factor investors are watching closely: central bank behavior around the world. While central banks mostly buy gold instead of silver, their aggressive accumulation of precious metals sends a powerful message. It tells investors that even governments are preparing for financial uncertainty. Rising global debt, geopolitical tensions, currency instability, and inflation concerns are forcing many institutions to rethink risk. At the same time, retail investors are slowly returning to the silver market. Social media, financial podcasts, and independent analysts have started discussing silver shortages more frequently again. Many people remember the silver squeeze movement from previous years when physical demand surged dramatically. While that excitement eventually cooled down, the long-term supply issues never truly disappeared. What makes the current situation especially important is that multiple demand forces are now hitting silver at the same time. Industrial buyers need silver for manufacturing. Investors want silver as protection against inflation and currency weakness. Renewable energy companies require more silver for future expansion, and governments worldwide continue printing enormous amounts of money to support slowing economies. Historically, silver can remain quiet for long periods before suddenly moving very fast. Unlike some assets that climb gradually, silver is known for explosive rallies once momentum builds. Small supply imbalances can sometimes create large price swings because the physical market is relatively small compared to other financial markets. That is why many analysts are now warning investors to pay attention. They believe the market may be approaching a moment where physical demand finally overwhelms available supply. If that happens, silver prices could react much more aggressively than most people expect. And if investor panic enters the market at the same time, the move could become even more dramatic. One reason silver attracts so much attention during uncertain times is because of its history. Silver has experienced explosive moves before, and when momentum enters the market, price increases can happen incredibly fast. That is exactly why many analysts are starting to ask whether the current setup could lead to another major breakout. To understand the excitement building right now, we need to remember how silver behaves during periods of financial stress. Silver often remains ignored while markets are calm. Investors focus on stocks, technology companies, or real estate because those areas usually offer faster returns during stable economic periods. But once inflation rises, debt problems grow, or confidence in currencies begins weakening, attention quickly shifts toward hard assets. Gold usually moves first because it is considered the traditional safe haven. But once investors realize silver is undervalued compared to gold, capital often starts flowing aggressively into the silver market. Because silver's market is much smaller than gold's, even a moderate increase in investment demand can create major price moves. Some analysts are now comparing today's market conditions to previous silver bull runs. During past rallies, silver prices did not move slowly upward in a straight line. Instead, they exploded higher in short periods as investors rushed into the market all at once. Fear of missing out became a powerful force. Retail buyers entered, institutional money followed, and physical demand tightened further. There is another reason why silver bulls are becoming more confident. The gold-to-silver ratio remains historically elevated compared to long-term averages. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. When the ratio becomes extremely high, many investors believe silver is undervalued relative to gold. Historically, periods of high ratios have often been followed by strong silver outperformance. At the same time, inflation remains a major concern globally. Even though central banks continue talking about controlling inflation, prices for everyday goods remain elevated in many countries. Energy costs, food prices, housing expenses, and debt levels continue pressuring consumers. Many investors no longer trust that traditional financial systems can solve these problems without creating even more money. That is where silver becomes attractive again. Unlike paper currencies, silver cannot simply be printed into existence. Physical supply is limited, mining expansion takes years, and industrial consumption continues growing. These factors create a foundation that many analysts believe could support significantly higher prices over time. But perhaps the most important factor is investor psychology. Markets move not only because of fundamentals, but because of emotion. Once enough investors believe silver is entering a breakout phase, buying activity can accelerate rapidly. News headlines attract more attention, social media discussions explode, and momentum traders enter the market searching for quick gains. Some experts even warn that if a true physical shortage develops, the market could experience panic buying. Investors who waited too long may suddenly rush to secure coins, bars, and physical metal before prices move even higher. We have seen smaller versions of this behavior before during times of economic uncertainty. Still, it is important to stay realistic. Silver is also known for volatility. Sharp rallies can be followed by sudden pullbacks. Emotional trading often causes investors to buy at the wrong time or panic during temporary corrections. That is why experienced investors focus on long-term trends rather than daily price swings. Right now, the silver market appears to be sitting at a very important crossroads. If industrial demand continues rising while physical inventories decline further, the pressure on prices could become difficult to contain. And if investor demand joins that trend aggressively, the next stage of the silver market could look very different from what we have seen over the last several years. The biggest question investors are asking right now is simple: what happens next? Is this the beginning of a long-term silver bull market, or are we simply seeing temporary excitement before another pullback? While nobody can predict the future perfectly, there are several important signals investors are watching very closely. First, physical demand remains one of the most critical indicators. If industrial users continue consuming silver at current rates while exchange inventories keep falling, the supply situation could become much tighter. Solar energy alone is expected to remain a massive source of future silver demand. Governments across the world are investing heavily in renewable energy infrastructure, and silver is essential in many solar technologies. Electric vehicles are another major factor. Modern electric cars require more silver than traditional vehicles because of their advanced electrical systems. As global EV production expands, silver demand could continue increasing year after year. Add artificial intelligence infrastructure, military electronics, and advanced medical equipment into the picture, and the long-term industrial case for silver becomes very strong. At the same time, the global economy remains highly unstable. Governments continue carrying enormous debt burdens, central banks face difficult decisions on interest rates, and geopolitical tensions are rising in multiple regions. Investors are becoming increasingly nervous about what could happen if another major financial crisis appears. During uncertain periods like these, precious metals often gain attention as defensive assets. Another important factor is the behavior of institutional investors. Large financial firms and wealthy investors can move markets quickly when they decide to allocate money into a small sector like silver. If institutions begin increasing exposure to precious metals more aggressively, the impact on silver prices could be significant because the market is relatively small compared to stocks or bonds. Some analysts also believe the current financial system itself is entering a period of transformation. Trust in fiat currencies has weakened in many parts of the world due to years of money printing and rising inflation. People are starting to question whether paper assets alone can fully protect wealth during unstable times. That conversation has pushed many investors back toward hard assets like gold and silver. There is also growing discussion about whether the silver market has been artificially suppressed for years through heavy paper trading. Some market observers argue that the true value of silver has not been properly reflected due to the enormous volume of paper contracts compared to available physical metal. Whether or not those claims are fully accurate, it is clear that physical silver availability matters much more during periods of rising demand. If physical buyers continue taking metal off the market, pricing pressure could eventually become stronger than paper market control mechanisms. That possibility is exactly why many silver investors are paying close attention right now. Still, caution remains important. Silver is famous for emotional price swings. A strong rally can attract speculative traders looking for fast profits, which often increases volatility even more. Investors who panic during corrections can make costly mistakes. That is why many experienced precious metals investors focus on patience and long-term strategy instead of chasing short-term hype. What makes the current moment unique is that silver now has multiple powerful forces supporting it at the same time. Industrial demand is growing. Economic uncertainty remains high. Inflation concerns continue globally. Physical supply appears increasingly tight, and investor interest is slowly returning. When several major trends align together, markets can move much faster than people expect. That is why this silver alert has captured so much attention across the financial world. Many believe we may be approaching a turning point that could redefine the silver market for years ahead. The silver market is no longer being ignored. Something important is happening beneath the surface, and more investors are beginning to notice it. Whether this becomes the start of a historic breakout or simply another step in a longer cycle, the pressure building in the silver market appears very real. For years, silver investors have argued that the metal was deeply undervalued compared to its industrial importance and limited supply. Now, with growing demand from renewable energy, electric vehicles, technology manufacturing, and investors seeking protection from economic uncertainty, silver is once again moving into the spotlight. The most interesting part is that the world economy itself appears to be entering a period of major change. Debt levels continue rising, inflation concerns remain alive, and confidence in traditional financial systems is not as strong as it once was. During periods like these, hard assets often begin attracting serious attention. But it is important to remember that markets never move in straight lines. Silver can experience powerful rallies, but it can also face sharp corrections. Fear and excitement both play major roles in precious metals investing. That is why staying informed and thinking long-term is extremely important. Many investors believe the current market environment could eventually push silver much higher over the coming years. Others remain cautious and believe volatility will continue before any major breakout happens. No matter which side turns out to be correct, one thing cannot be ignored anymore. Silver is becoming one of the most closely watched assets in the financial world again. And if physical shortages continue growing while investor demand rises at the same time, the next phase of this market could surprise many people who are still sitting on the sidelines today. If you enjoyed this update, make sure you subscribe to Pulse of Silver and turn on notifications so you never miss the latest silver news, market analysis, and price predictions. The silver story is moving quickly right now, and we will continue covering every major development as it happens. This video is for educational and entertainment purposes only. Nothing in this content should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. Silver and precious metals markets can be highly volatile and involve risk. Always do your own research and speak with a qualified financial advisor before making any investment decisions. Your financial decisions are your own responsibility, and past performance does not guarantee future results.